Here in this video, we will go over everything you need to know in regards to Tesla stock coming tomorrow. Now, tomorrow is going to be a huge day for Tesla as well as the broader markets because we do have Tesla's Q2 delivery number coming out, but we also have a speech from Fed Jerome Powell as well as the JOLTS job openings number. Now, also today, 10-year Treasury yields got blown out. They were up 14 basis points for no reason. And just think about this logically. A 14 basis point increase in the 10-year Treasury yield for no reason is a reason. Okay, there's a reason for that. And tomorrow we may get the answer for that. Now, for a little bit of comparison, a 14 basis point rise in the 10-year Treasury yield would be comparable to a really bad CPI number. It would be comparable to Jerome Powell becoming very hawkish or something along those lines. And in fact, we actually got good news on the inflation front today, which makes things just that much more interesting. So let's start with the whole Tesla delivery situation. Troy Teslike tweeted his final estimates for Tesla's production and deliveries this quarter. His Tesla delivery estimate for Q2 of 2024 is 423,000. The analyst consensus is 441,000 deliveries. Now, I personally think Tesla's going to come in closer to about 440,000. Now, the latest estimates we have seen today from analysts are around 420,000. So expectations are actually going lower today, heading into that delivery number that gets released tomorrow morning. So I think from that metric, lowering expectations is probably a good thing. Now, there's going to be two different things Wall Street is talking about coming tomorrow. There's going to be the month-over-month change in deliveries and the year-over-year change. And the year-over-year change, if you come in at 423,000, is going to look like negative 7%, 8% or so year-over-year. If you come in at, let's say, 440,000, then you're going to be looking at like a negative 5% year-over-year number. And that's not as bad. But that quarter-over-quarter number is going to look really good because last quarter, you only had 386,000 deliveries. So whether you're 420,000 or you're 440,000, that's going to be good news for Tesla. And I don't know exactly what number Wall Street is going to focus on more, the year-over-year or month-over-month numbers. But what I will tell you is Tesla stock was up almost 6% today. And that is the best sign that you could get, let's be honest, of how Wall Street is feeling about these delivery numbers. If we were really fearful about these delivery numbers coming tomorrow, you would not see Tesla stock that broke above the 200-day moving average today, that had a very high volume day, and it looks like institutions are getting repositioned back into Tesla. In fact, I would argue the number coming out tomorrow doesn't matter much for Tesla, judging off of the reaction that we're seeing with Tesla stock today. In fact, most of Wall Street is starting to pay attention to the August 8th catalyst for Tesla and what the robotaxi rollout could look like, the timing for that, the expected margins, all of the new information that we will get on August 8th. I think that's a lot of the reason why tomorrow doesn't matter much from Wall Street's perspective. Now, Tesla stock itself in the options market is priced to move about 5% up or down. Now, over the past 4 quarters, the delivery numbers, the day in which they've been released, Tesla on average has moved about 3%. So you are actually pricing in a larger move tomorrow for Tesla stock than what you have priced in the last year for delivery numbers. So expectations are Tesla stock is going to be volatile tomorrow. And again, just being the bearer of bad news that I sometimes can be, Tesla stock being up 6% the day before delivery numbers could set you up for a downside move if that number is worse than expected tomorrow. But again, I think you're going to come in closer to about 440,000 deliveries, at least in the 430s, in my personal opinion, more on a conservative estimate. And that's still going to be better than a lot of the Wall Street targets that we are seeing coming out today, around 420,000 deliveries. I also think, again, today, considering 10-year Treasury yields are up almost 14 basis points to 4.481% for no reason, it's not having a negative impact on Tesla. Typically, it would. So even consider that. You have a massive rise in 10-year Treasury yields for no reason. you would expect Tesla would be negatively affected from that. So I can only imagine if 10-year Treasury yields were actually down on the day today like they should have been, then you probably would have seen a 10% plus move in Tesla stock today. And yes, I am very optimistic heading into tomorrow. You can see we closed above that 200-day moving average at $205.92 per share. And honestly, I think Tesla stock can make a run well into the 220s, possibly even tomorrow, based on the delivery number. And what's very interesting about today is if you take a look at stock twits for Tesla, sentiment was actually bearish at 39, which is a lot more negative than where you were even over this weekend when sentiment was neutral at 53. So what this is really telling me is that retail investors have gotten bearish today. They're pretty negative on Tesla today heading into tomorrow. So where's the buyers coming from? That's likely coming from hedge funds, institutions, and large money managers that are fueling this upside move in Tesla, which is not a small move. This is a considerable move. This is costing the short sellers about $1.2 billion in losses today alone. This is a big market cap move. A 6% move higher for Tesla is nothing to laugh at. And it's being driven by smart money. Now, I think retail investors coming tomorrow will get a little bit more bullish on Tesla as well, and that could help push the next leg of this rally higher for Tesla. And let's also be honest, hedge funds, institutions, money managers, they may already know what the Q2 delivery numbers are already, right? This could just be a leaked piece of data by Tesla, judging off of the super strong day that we've seen today. That's a possibility. Now, the main conclusion that you can draw here is Li Auto, XPeng, NIO, they all delivered really good numbers for Q2 in China. That data came out today. You're looking at 50 to 100+% year-over-year growth rate for their deliveries. That's a good sign for Tesla in China. Tesla China's Weibo account also said that June was basically the best month ever for Tesla's deliveries in China. So that's kind of also boosting confidence that delivery numbers will come in okay for Tesla. But again, such a strong move the day before a big catalyst, breaking above that 200-day moving average does suggest to me there's a lot of momentum here. There's a lot of capital going into Tesla here. And again, just considering 10-year Treasury yields are up almost 14 basis points today, that's not normally what you would expect. And again, we're breaking above the 200-day moving average for the first time since January 12th of 2024. I mean, this is the first time basically throughout all of 2024 you have been above that 200-day moving average. This could really set you up for a run well into the 220s, maybe even tomorrow for that matter, and subsequently possibly into the 300s. Now, it does depend what happens as well in markets tomorrow and throughout the rest of this week. We're going to have a lot of data coming out. And first, we'll start with tomorrow's data. And tomorrow will be epically important again because there's no good reason why 10-year Treasury yields are up 14 basis points today. In fact, if we take a look at the data that came out today, you actually seen your ISM manufacturing prices paid component come in at 52.1. You were expecting 56. So manufacturing inflation actually came in lower than expected. Employment came in lower than expected. The headline manufacturing PMI came in lower than expected. New orders came in a little bit higher than expected. That's really your Goldilocks scenario. Lower inflation, better activity in the manufacturing sector. That should have actually caused 10-year Treasury yields to sell down. In fact, it seems like the whole world's bond markets went higher today in France, in Germany, even though Germany had lower than expected inflation, in the US, in Canada, literally everywhere, 10-year Treasury yields, 20, 30-year Treasury yields, all went higher today. And that does not make a lot of sense unless the markets are conditioning for a hawkish Jerome Powell tomorrow. Again, that's one of those things where you got to pay attention to a 14 basis point rise in the 10-year Treasury off of no news at all, heading into Jerome Powell the next following day. In fact, just to kind of prove this point a little bit more, you can see we got a new Atlanta Fed GDP Now tracker estimate today for GDP for Q2, and it plummeted again from about 2.2% to 1.7% based on the manufacturing data that we got today. That should not cause 10-year Treasury yields to rise. Lower GDP should cause 10-year Treasury yields to, fall, right? Because you're getting closer to a recession. Typically, when you get closer to a recession, you don't see yields rise into that. You see yields fall into that. And that just did not happen today. You can also see what should have happened today based on the data is market should have priced in a greater likelihood of your first Fed rate cut coming July 31st. In fact, on Friday, there was a 10.3% chance of your first cut coming July 31st. Now it's 7.2%. So odds of your first cut in July are falling about 3% today. 10-year Treasury yields up 14 basis points heading into Powell tomorrow. Even though inflation data came in good today and really kind of Goldilocks across the board, I don't think this is setting us up for a great tomorrow, or maybe not a great next couple of weeks. There is a major reason why Treasury yields are up 14 basis points today, and we just don't know what that is, and that's kind of ominous. That's very ominous because bonds are typically right. Markets can do what markets do, but bonds, no. You want to pay attention to the bond market. The bond market is anywhere from 2 to 5 times larger than the stock market in total value, depending on what is going on in the markets during that time. During a crash, bond markets are obviously going to be larger. Right now, still the bond market's over 2 times the value as the stock market, and when bond investors are sending such a risk-off signal like this, 14 basis point rise in the 10-year Treasury, I don't really care what stocks do on a day like today. Stocks could be up 1-2% across the index. I would still say today is a worrisome day. And now the S&P was not up anywhere close to that, struggled to stay green most of the day. And I think we're going to find out exactly why 10-year Treasury yields are up so much today, probably tomorrow. And I think it's giving us a pretty good heads up that Jerome Powell is gonna be hawkish. Now, Jerome Powell will speak at 9:30 in the morning tomorrow. At 10 o'clock in the morning, about 30 minutes after Fed Jerome Powell's speech starts, you will get JOLTS job openings. You're expecting 7.9 million job openings. Last month, well, for the month of March, came in at 8.059 million. This data that we will get, April, this data that we're gonna get is for the month of May. And here's kind of the deal with JOLTS job openings. If job openings come in high, that's a good sign the economy is still doing good, okay? Because a business is not going to look to hire more employees if their business is not doing good, right? That's kind of the simple conclusion that you can draw from the JOLTS job openings. If job openings plummet, which is possible, then that would suggest the labor market's not nearly as strong as we think, and that would be problematic for the economy. And that's really all we are going to get for tomorrow at 10 a.m. You will get the RCM and TIPP Economic Optimism Index. You're expecting that is going to come in at 41. Last month was at 40.5. You've seen a decline in this for a while. I don't think the markets are going to react to this. Obviously, when you have JOLTS job openings and a speech from Fed Jerome Powell, that is what is going to dominate the headlines. And again, just to be clear, this rise in 10-year Treasury yields today is signaling we're probably going to get some downside for markets. Now, again, Tesla specifically has its own catalyst coming out tomorrow morning, which whatever happens in the markets could amplify Tesla's move positively or negatively. Imagine it like this. If Tesla comes in with really good deliveries and we get a really dovish Fed Jerome Powell, 10-year Treasury yields fall, maybe this 14 basis point rally in the 10-year Treasury yield was just BS to begin with, then maybe that could help boost Tesla stock even more and help the rally be even stronger. Vice versa, if deliveries come in okay or great or bad for that matter, but the markets sell off because Jerome Powell is hawkish and 10-year Treasury yields continue to rise, then maybe that puts a little bit of a lid on Tesla stock and what Tesla will do in the near term. I will tell you from the RSI, Tesla is already overbought at about 73. So I do think, any time you get to that overbought level on Tesla, it can stay overbought for a period of time, but it does eventually lead to a pretty nasty pullback or correction in the stock. I think Tesla could rally a lot more before that happens. Take note of what happened in mid 2023. Tesla stock was overbought for almost an entire month, and the stock during this time frame, if you sold it when the RSI went overbought, you sold Tesla at about $214 per share. The stock ended up rallying all the way to 300. So you can be overbought for a period of time, and it doesn't necessarily mean the stock needs to fall, but it's just one of those things that says you are overextended at least a little bit, and you could be due for a short-term pullback at some point within the next couple of weeks. You can see today there's a lot of very bullish option positioning represented here with the interesting flow sentiment on Ortex. You have 42 different trades totaling about $9 million with a positive order value of 86%. And even over the past week, you have seen 127 different trades totaling about $54 million with a positive order value of 70%. So across the board, it looks like especially hedge funds, institutions, and really big money has been bullish on Tesla for quite a few days now. It looks like retail investors may be a little bit more defensive. Also, as I mentioned earlier, this almost $12 move in Tesla, when you have 106 million shares outstanding, does equate to a loss of, let's see, drum roll please, let's just call it $12. It does equate to almost a $1.3 billion loss today for the short sellers, which if you get another strong day coming tomorrow, the losses are going to mount pretty quickly. So the dollar amount that's currently sold short in Tesla is really closer to about $23 billion right now. And that's putting a lot more pressure on the shorts, or it will put a lot more pressure on the shorts to potentially start to cover on short positions. Now, as I mentioned in the last video as well, really, no matter where the deliveries are, I think Wall Street is starting to look at Tesla as a troughing story, as things are going to get better from here and not get worse. And as things start to look like they're getting better, then even a bad number can be seen as a rip the Band-Aid moment off, as Dan Ives would say, as a we can breathe, things are going to get better from here kind of moment. And whenever those moments happen for stocks, even in a really bad setup or previous performance, like you've seen with Tesla down over 30% year to date, at least before today's rally, you can actually start to get a recovery in a stock before the actual deliveries in this case or fundamentals start to get better. So I think that's another aspect of this. Sentiment overall is starting to get better for Tesla. And even a potential Trump presidency has started to have a positive impact on Tesla stock as well, I believe, because what's going to happen during a Trump presidency is you're going to get more rate cuts, you're going to get easier money, and hopefully a better economy, which will be good for Tesla's deliveries going ahead. So this is really just my opinion and could be subject to obviously be wrong. I'm not a financial advisor, I'm not a financial planner, but from this perspective, from what we're seeing today, it looks like we could be set up for a further run in Tesla. Again, I want to caution you with 10-year Treasury yields. They're essentially snitching. They're saying that something is not right. Something is not as we think. Again, considering the data today actually came in really good on the inflation front. Maybe that means Powell's going to be hawkish tomorrow. Maybe that means the JOLTS job openings are going to come in really high tomorrow. There is some big reason why 10-year Treasury yields are up 14 basis points. That's, again, equivalent to a, bad FOMC day. That's equivalent to a bad CPI day, a really hot jobs report, something along those lines. And you don't see a 14 basis point rally in 10-year Treasury yields ever for no reason. So there's a reason for this. And we'll see what that reason is, and we'll see how it affects Tesla stock. So let me know what you think about this information down below in the comments section. That is going to do it for this video. You guys enjoy the rest of your day, and I will see you in the next one.